Welcome to Silicon Valley After Dark, AI edition. It's another Friday here, 8 p.m.
Yeah.
Great week, great week. I mean, lots of stuff going on.
Hey Eric, how are you? Yeah. So this is yes, Friday evening. We're having a good time. I think we started just a few seconds over, but I think we are on track.
Nice.
Yeah.
Well, great to see you again. Great to see you again.
Yeah.
Lots of AI news as always. Lots of stuff going on. Friday evening, the big thing for me is, oh my God, the stock market, man. The stock market took off the last 2 days. All the AI stocks are up, right? Like it's
ripping. It's completely going off the rail.
Yeah, I think the Strait of Hormuz, is opened up a little bit, right? Or the news is going to open up, and so as soon as all of the geopolitical things in that region settle down and energy prices stabilize. Right. That just makes everybody much more comfortable. Right?
Yeah, I think there's this super interesting time, honestly, right? Like, I mean, there's the whole geopolitical conflict going on, in the Middle East, but there's also this whole thing around AI going on, right? And AI is not showing any signs of slowing down in terms of usage and so on. So there's kind of a couple of layers of the cake, if you will. So it's kind of and then the market is trying to grapple with all of that, actually.
Well, I think all the AI stuff, because since early March when the whole war kicked off, I think that the AI stuff has been undervalued, right? Because just of the unrest that happens in the global market, right? When that happens, and AI has been booming in the announcements at the NVIDIA conference, and all of the AI announcements over the last month have had a really positive momentum, but it just hasn't been reflecting in the stock market until yesterday or the day before yesterday, when all of a sudden everything just starts booming.
Yeah, I mean, I think I believe the Nasdaq or S&P 500 has seen 15 days of green right now as of today. So that's been a massive bull run, if you will, right? So there's definitely a risk-on sentiment, I think. I don't. Valuations are cheap. I mean, overall market valuations, I think, are very elevated, right? Like overall, whether it's a AI stock or not, even if infra plays, right? Even consumer, I think a lot of retail stuff is all, at a pretty high number valuation wise. So, I think yes. One thing that I noticed though is, like, specifically if you were to double click on this phenomena, right? Like just in terms of valuations, last few days, I think the AI infra layer has seen a big uptick. Things like Nebius, CoreWeave, Bloom Energy, and so on, some of which, of course, have been very popular with retail investors for a while, are sort of coming back up. Like they're coming back up in popularity, really. So that's been an interesting
there has been conversation about, it's not necessarily a software in Silicon Valley.
Right.
It's not a war on the AI models. It's much more a war on the infrastructure, right? Chips and data centers and power.
Right.
So I think that's some of the stuff that's going on, right? Is that the guys are making chips, NVIDIA and others, right?
Yeah.
That stuff is heating up, right? And
absolutely. I think not only is the chips, of course, the NVIDIA and Cerebras, etc. I mean, those guys are doing amazing, right? But clearly looks like the bottleneck is shifting down to power and like data center capacity and warm shells and folks like Satya Nadella, etc. have spoken about this, like, I don't know, 6-8 months ago. So it's kind of interesting.
But at the same time, stock market booming because we've had pent up news and pent up growth,
right?
And now that the way, who knows, the Strait could close back down again. I wouldn't put anybody at risk of settling anything in the world right now.
That's right.
But certainly. There's still memory shortages. We talked a little bit last week about how the maybe the memory was going to free up, right? Because some of the big orders from Facebook and others got canceled.
Right.
But from what I talk about, guys on the street, the memory prices, it's kind of like oil. When barrels of oil price comes down, doesn't mean your gas at the pipe is going to gas at the pump is going to go down. And I think that's anything you're buying that's infrastructure. is still going to be expensive and in limited supply, and the middle guys and little guys are basically saying, sorry, can't be here, can't afford it, can't get memory, can't get machines, can't get anything, right?
Right. Yeah, I mean, from all accounts, I think memory is having its moment, of course, right, for the past few months, and by all accounts, there's no slowing down again, right? Like the same thing with chips, and I think we covered this in our previous podcast. But like Amazon said, like if they were to carve out their chip business, that would be a $50 billion run rate business. So I think there's definitely a lot of demand, and they also mentioned on top of it that a single customer was willing to take all the supply that they could get of those chips. So I think it's a very bullish indicator just in terms of demand. All right. And as all of us use, anybody who's I shouldn't say power user, but like even like moderate user of Cloud Code and things like that, or Codex, I mean, you can see that you max out on your tokens fairly quickly, right? The Uber CTO said his team maxed out on the tokens, right, in the first 4 months of the year. I mean, we are in April, for what they had budgeted for the whole year. So there's very significant usage of these tokens. Of course, the open question is, hey, what are enterprises seeing in terms of ROI, right? Like that's the open question, right? And I think we don't have like a solid, cogent answer around that yet, but clearly we are seeing productivity anecdotally, or just like from our personal experience, clearly there's a massive improvement in productivity for people.
So at the same time, the AI infrastructure, a little bit of NVIDIA cracks are showing, right? Other chip vendors are showing up, starting to nibble at them. It just reminds me of any, market leader. When you're at the top, you just have to always, be aware that people are going to come after you, and eventually you're going to lose. You're not going to own 99% of the market forever, right? And so investors are making big bets in this, right? And some of the chip guys are actually getting more money, right? And
Cerberus, you're talking about Cerberus, going IPO. Yeah, I mean, I think definitely it's a great time for an AI company, any sort of company, to go public, I think, right? Just before starting our show here, I was looking up this company called X Energy, and they are going public because they are a small module reactor, right? And SMRs are currently sort of one of the technologies to solve this energy bottleneck, right, for data centers. So that's in the same vein as Cerberus going public, right, which is sort of solving the chip bottleneck.
Right.
All of these folks, of course, have been at it for quite a while. Definitely, you ought to give them some credit for that. But I think the market is definitely optimistic and wants to support, these deals. So that's interesting. Yeah. And I don't know if you had a chance, Eric, to look at, Dwarkesh's podcast yesterday, Dwarkesh Patel's podcast with Jensen. And one of the themes, right, really, I mean, talking about, at the top, if you're in the top of the market, NVIDIA, which NVIDIA is, right, the conversation, at least the first half, is like solely focused on Google TPUs, right? Like TPU as a competitor, right, to NVIDIA, right? And like Jensen is having to take those questions and like address it, right, in a very frank and honest way. So he did a great job, honestly. I think the key difference really here is TPUs are meant for like an internal use case. It was never meant for anybody else to operate on, right? Like while a GPU is a general purpose unit and meant for others to operate on. So it's constructed entirely different, programmable, CUDA, software programmability, etc. So, I think feels like the bottleneck on chips will ease up in a few, in a 3-4 year time frame. And Jensen seemed to suggest even bottlenecks around ASML, right, which is perceived as the biggest sort of bottleneck in the supply chain, in the chip supply chain, with what they do around for etching and for all the semiconductor processes, that those machines cost like $500 million a piece, right? So that is considered to be one of the big bottlenecks, but he thinks that even that can be solved in like 3-4 years. So that's a pretty interesting take. Like I think how capitalism sort of rallies around demand, like wherever there's demand, capital and resources flow to that and solve the problem. So that's pretty cool.
Well, interesting, lots of opportunity for investment, right? That's what I would say here is that the market rally back up, but if you're paying attention to the valley, in Silicon Valley really is about making money, right? Like, we talk about technology, but really everybody's here in order to make money at the same time. And so look, this is what's happening. I think we're going to have a good run for a little while, right? If everything settles down in the geopolitical war scenario, we could see some upside because I think we haven't touched it. The hardware build out is we're just entering in the beginning of the hardware build out. So take a look at your hardware portfolio and go with that. Moving on, the next big shift, right? Next segment would be SaaS service, right? And what's happening with SaaS service? I hear more stories this week about, SaaS. If you're writing an application, and I'm using AI now, and I'm just like the old days. I had Photoshop. I had my regular yearly, once a month paying their SaaS privileged for using Photoshop, and I turned it off, right? And I've been doing image generation, but I'm just doing it with my tokens on ChatGPT, right? And so I stopped generating images myself, and quite frankly, I'm getting great images out of it, right? And so the SaaS market, in general, is stressed, right? And so I guess you're telling me there's news on that.
Yeah, look, I mean, we all saw what happened with SaaS stocks, what is now called, I guess, the SaaSocalypse, right? This is about, what should I say, about 6 weeks old now, I guess, right? That's when when Claude released some features, Cowork, I think, right? Like, when Claude released Cowork, market got spooked. Folks on Wall Street thought, okay, my God, this is the end of the world. Meaning vertical software, is gonna kind of go down the tubes kind of thing. And I mean, the whole sector as SaaS as a whole, I think, has gotten re-rated, right? And the multiples have come down, dramatically. Now, there are a couple of areas which have stood out, right? And one area is just around design, right? So if you look at, I mean, the bellwether for design is, of course, Adobe. And Adobe stock has been going down for the last, 2 years now, almost, right? And Figma, which is the new kid on the block, so hot stock, really, 2-3 years ago, right? But when they went IPO, was okay, I would say, right? Like, I mean, they didn't get a massive pop, but it has had from its high, like, it's down 85% in the past 12 months, and it went down 7% today. And the reason for that decline today and the continued skepticism is because Anthropic announced today that they're going to launch a design product, right, on top of Cowork and Claude and so on, right? Like the existing desktop product. So that was a big red flag of what's going to happen to design, and especially Figma. And the interesting tidbit here really is the CPO of Anthropic, Mike Krieger. He was on the board of Figma, and he resigned yesterday. So that was an indicator yesterday that something is coming from Claude, on this direction. So I think SaaS stocks,
that's what we talked about in a couple shows so far. It's just that if you're one of the big AI engines, right, you can pick and choose which market you want to go after next, right?
Right. Absolutely.
You've got AI, you can build whatever you want, and if your AI is smart enough, it's going to pick that. And it comes back to, do enterprises trust the big AI providers, right? Because it doesn't take a lot to make new software.
Right. Yeah, I think enterprises, large enterprises, the Fortune 1000, 2000, I think are going to be much more measured in how much, what data they share, training, etc. Right? Those folks have more control. But if you are an individual, whatever, designer, app maker, somebody building slides, all of that is training data for these foundational models, right? And that's the terms of service, right? I'm giving you something for free and I use your data for training, right? Like, so that's a quid pro quo here. And these models get smart really fast, and they have the ringside view on what sectors have traction, right? Like, if people making slides is a large part of the incoming tokens, like prompts, they know, hey, we got to build something for this use case, right? If somebody is building apps, hey, we got to do something for that. Coding, of course, came up like that, right? Like, I mean, you had Codium and Cursor, right? Codium back in the day, and then Cursor. I mean, that is exactly how, right? I mean, both OpenAI and Anthropic came to the coding use case, right? So, I mean, that's been the killer use case in AI so far, right? So, anyways, yeah, I mean, if you're a vertical AI player or a vertical SaaS player and you use OpenAI or Anthropic in the backend, I mean, I think it is not lost on people that, hey, I'm giving my data for training, right? Like, so that's really what is being manifest here with Figma. So Figma is unfortunately in a very tough spot here. And I think Canva is up next, right? Canva is not public, or is it? I'm not sure. I don't think it's public. But yeah, I mean, they got to now, protect their territory. And Canva is in the same category, in the same design category, and more DIY, more sort of no code. Even more no code than Figma, right? Slightly different category, but fits in the overall similar rubric. So
I think that I talked to some enterprise people again this week, and a lot of them are kind of like, on one hand they don't want to put the investment in AI. Right. They're like, we'll just use the big providers because we really don't want to spend our time.
Right.
But then there's a certain number of them that are getting it, going like, I talked to somebody yesterday, can't mention his name, but they're like, look, we're thinking about running our own private AI because we're deathly afraid. We're deathly afraid of giving away the secret sauce of our business, and we don't want them running around looking at everything we're doing. Right? This was somebody high up at a big company.
Right.
That was like, look, we're worried about that. Right.
Yeah.
And maybe we really do have to just focus on our own private models and doing RAG with our data and just keeping it all on-prem and keeping it firewalled away from anyone outside. Right. Because they're that concerned about, giving them the keys. Now, it doesn't take a lot of an AI engine to rewrite Photoshop, or Claude can write code, right? I'm not sure that isolating yourself around AI is going to protect you, right? There's the innovator's dilemma that if you don't get with the program and move fast, you're worried about somebody taking you over, then that's not going to help you, right? So I'm not sure that strategy is going to work either way.
I'm not super close to the open source ecosystem, but the fact is, Anthropic, literally, right? Like, I use Claude Desktop, and they push out updates like couple of times a day, literally, right? Like, it asks me to update my desktop. So this crazy amount of updates that they're pushing out, these foundational models, right? And if I were to say, hey, I'm going to use an open source model and I'm deployed on my server and use that as my sort of LLM backend, I think seems like there is actually a hill to climb there, really, in terms of keeping those things current, updated. What happens when a new model comes out, right? Porting over all my data, my RAG systems, etc. Fine-tuning. What about fine-tuning, right? And again, I mean, there must be companies there that allow you, help you, take your fine-tuned infrastructure for sort of Model X to Model X.2, right? Like, that sort of transitions that have to happen time to time. But the whole question is, hey, if these foundational models give really high quality output, especially the frontier models, right? Like Mythos, for example, from NVIDIA, which it has not, from Anthropic, which has not been released yet. They've released it only to all these cybersecurity companies, right? Because it's in a good position. This model is in a great position to find bugs and so on and so forth. So you don't want it to get in the hands of, bad actors. But the fact is, I mean, is there a model in the open source domain that and the answer, I think, is no, as far as I know, right? Like, open source models are just not there. I mean, they're a few months behind, right? 2, 3, 4, 6 months behind. But that could be that has actually real implications, So it's a good question, right? Like, how do you deal with this? But we know, right, both Anthropic and OpenAI especially, right, is trying to go penetrate these enterprises, right, large enterprises. And I think they just had an announcement today. I didn't pay too much attention, but sort of a marketing spin, PR around, hey, we have a new offering, forward deployed engineers, right, for helping large enterprises go live, right? Like, so if you're a Unilever or a Procter & Gamble or a Walmart, you're going to say, hey, I don't want the data to leave my VPC. What kind of guarantees can you give me, right? Like, and so they must have some good answers, right? Especially around training. And even small companies, I mean, if you take small enterprise license, it does tell you that they don't train on it. Now, who knows, right? Like, I mean, I don't know enough about, these things in depth to know what they do or don't do. But yeah, you're right, Eric. I mean, I think
large
it comes
companies,
down to
software companies and soft data versus hardware companies, hard data.
Yeah.
If you're a Costco, you're delivering, or you're Walmart, you're delivering goods and channel management. You don't have to worry about AI, and you don't have to worry about a lot of big companies stealing your AI and delivering, because your value is in something very concrete and hard. If your value is in software or services, right? Photoshop, any other nice little service, you got a problem, right? And you should be worried about locking things down. I don't know if it's going to help.
Well,
I have a feeling I think it will.
Yeah, no, Eric, I'm going to take two examples, right? So let's take Walmart and take Synopsys, right? Synopsys, EDA, tooling, and so on and so forth, right? And with Walmart, for example, I mean, they do have supply chain data, customer data, right? Like, I mean, meaning patterns, right? Algorithms like that they have picked up on and optimized for a long time, right? And that is IP, right? So you don't want a model to learn that, right? Like, so I think there is a moat for them there. Now, if you think of Synopsys with EDA tooling, yes, it is software, quote unquote, right? But these machines are, I mean, like Claude, like, I don't know, 2 months, 3 months ago, right? Like, there was news about how it can write a compiler entirely. I mean, that's amazing, right? Like, so these things, I mean, who knows, right? It can pick up on EDA software fairly easily, right? So what do you do, right? Like, so for Synopsys, definitely the smart thing would be, hey, how can we hive this off and definitely try to make sure that this doesn't leave our walls, right? So I think it's something that everybody's grappling with, basically, for sure. Trying to figure out what a good answer looks like.
Yeah.
Well,
at the same time, there's just so much. Even the government's paying attention to what's actually happening. AI tension. What about safety? Right? Like, we were talking about this with a couple of guys. Like, if my AI kills somebody, right? Am I responsible?
Oh yeah.
Who's responsible for behavior? Or if I'm using my AI to recommend, how to. A small example. I own a beef farm, right? And we produce honey, right? And I was looking like, okay, how sterile do my jars have to be? What's the process? What am I doing with that? And in the end, it told me what to do, and it gives me examples of that. But like, do I believe it? Do I not? Do I not have to sterilize everything because it says it's okay because honey has? I believe it because it sounds right, but then there's liability issues, right?
Yeah.
So the government has to get involved here and kind of set some rules for like, how much do we, rely on AI, and what are the vulnerabilities to society, especially when you come into security and cyber attacks and things like that. But all aspects of life, if you start over relying on, AI, and this comes back to if my Uber speeds, or not my Uber, my Tesla, my self-driving car speeds and I get a ticket, who pays the ticket?
Right. Yeah, no, I think liability for what agents do on your behalf, who takes the liability? I think my thesis is that there's a new category of insurance companies that are going to get created where the liability is like you take an insurance policy for your AI agent going rogue or doing wrong, right? I think that's what is going to eventually happen, right? In my opinion. But yes, I think it's kind of early, right? But yeah, I mean, I can think of a lot of examples, both in the B2B versus, even consumer scenario, right? Like B2B, let's say you're an insurance underwriter and you're using AI, right? And let's say you deny a health insurance claim from somebody or like, right? And then the person dies or, right? Like you get sued,
sure,
right? Like,
right.
Do you then go sue the AI? That told you, right? Like maybe it was a third-party vendor, right? Who you bought software from.
I've been seriously looking at liability insurance and studio insurance, and how much do we pay, and like using AI to kind of coach us through this model, right?
Right.
It's definitely going to impact my risk profile and my behavior, and then the government has to take a look at that as well and go like, okay, and how many lawyers do we need? Right, like if you've had to do any legal work lately, I guarantee you're using AI for 50% of it now.
Yeah.
Okay, how much liability is there, right?
Yeah.
So all of these things,
I mean, I think there's going to be some precedents soon or probably already, right? Like Harvey is raising Harvey, which is legal tech, right? AI for legal, right? Is currently raising, I think, at a $11 billion valuation. I think they recently raised.
And this money's got to come from the market, right? Like if you're offering services, you have to have services that offer value, and somebody's going to be the loser, right? Somebody's going to be a loser to that.
Right.
And when you have a loser to that, right, that's why they're getting valuation, because they're able to create value in the market, which means that lawyers are going to lose that value. If you create $11 billion in AI value, it means that some lawyers are losing $11 billion.
They're losing jobs, right? Yeah, I mean, your interns and first-year associates are not getting hired.
Well, and we have a stock ticker on the bottom of our screen, and like one of the things that we talked about before the show is like, what's our short strategy? Everybody talks about our long strategy. Everybody talks about like, what are the top ones, chip makers, guys that are the AI big frontier model makers. But also you got to look at like what are short strategies? A lot of guys got really wealthy paying attention to shorts, right? And so, one of the things you got to look at is like how many GameStops are out there that are just going to go under, right? And they're holding on because they're trying to fight the trend. They're going to lock their data up. They're trying not going to happen. But in the end,
Yeah, I mean, I think the jury is out, right, on SaaS, but a single category, honestly, right? Like that's from an outsider's perspective. But I think you need to go in and look at each sector. Like there's cyber, for example. There's this supply chain. There is more traditional SaaS that's centered around productivity, right? Like Monday.com or Notion, Asana, etc. Right? So there's these different categories, right? And once you start carving them out, then you get a much better handle on what is their value, current value relative to AI, and how many of these companies potentially are going to use AI to their benefit, right? Like, I mean, is also, and some of them are going to adapt, you see. Right. I think it's a very important point, right? Not everybody is going to just disappear, poof, right? Like
so I think you should be able to take a look at who's raising money in the Valley, right? And there are, tools, coding tools, supply chain, AIs that are actually raising huge amounts of money. And then you can just do a short strategy against those. Because if the VCs are willing to put, $50 million, $100 million, of $500 million to $2 billion into, a legal AI or others, the likelihood of it succeeding and driving some of these brick and mortars, out of business is high, right? It's like... Boy.
Yeah, I mean, but shorting happens over a smaller time frame, while venture outcomes happen over a longer time frame, right? Like, I mean, I'm going to short for, let's say, you can short for the next 12 to 24 months. I don't short, so I'm not really a specialist on this, but your window is 12 to 24 months on shorting, but a venture outcome on, let's say, an OpenAI or, Anthropic, right, is more like 7-10 years, right? Like, I mean, OpenAI started in 2015, so we are in 2026, so it's year 11, right? Like, so they're going to go IPO this year, right? And Anthropic too, but yeah, I kind of get your logic though. I think what you're saying is, hey, if I think people are not fools either, right? Like, I mean, Adobe has been suffering for a while in terms of its stock price, right? So people do have a sense, right? Especially institutional investors. I mean, they have access to analyst reports, etc. So, but I think I would overall broadly, I would say though that I think Wall Street has been sort of somewhat skeptical of the growth of AI, right? Like they have underappreciated the growth in the past.
Well, and that's why I think one of the closing segment we have to talk about today is AI in a bubble in its own, right? How long will these $1 billion and who will be the winners and who will fall out, right? Like, and how much of that is real? And it certainly is an AI bubble, but at the same time, we've seen everything skyrocket this week as the war looks like it's going to be settled,
right?
But is the value that they're dumping the money in to go after the legal market or go after the healthcare market or go after all of the soft markets,
right?
Is that actually going to happen? Or are they going to be able to execute on it?
So I would make a distinction, right, in terms of sort of the inflow of money both in private and public markets. I would make a distinction, and here's why. In the private markets, when somebody puts in whatever $50 million at a $500 million valuation, like people look at the 500 million or 5 billion and say, whoa, like that company is worth 5 billion. But really, it's the round dynamics, right? Like meaning how much money are those folks raising? How much do they need to scale to beat the incumbents, etc., is what determines the size of the raise that they're doing, right? And of course, what people are willing to pay up and what kind of valuations people are willing to tolerate, right? Investors. So, I mean, that headline number of the valuation is actually an outcome of the amount of money that was raised. Like Meera Murati, the ex-OpenAI CTO, she raised $2 billion at a $10 billion valuation, if I'm not wrong, okay? Now, 10 billion for somebody who, forget product, I believe like this is like from day one, right? Like now what would you say to that, right? Like, but it's just that, hey, she needs the $2 billion to train models for the compute. Like, so if she needs to raise 2 billion, just in the way the, pref stack and the cap table works out, it has to be at a $10 billion valuation. So the $10 billion sounds ridiculous, but hey, she needs a $2 billion to do the training that she needs on the model. So I think that's on the private market side is all I'm trying to say, right? Like, but if you look at public markets, I do think a lot of stuff is elevated, right? So I think retail, maybe even institutional, has a tendency. I mean, everybody, FOMO is a human sort of failing, I guess, right? Like, so we are given to that, but I mean, you look at some of these companies, the valuations could be
fear
running
of
ahead.
Missing out.
Yeah. Fear of missing out, right? Like, so
so here's my take on it. This is why I think this is interesting. This is Eric's intellectual moment here, is that most of us can't get in pre-IPO investments, right?
Right.
We're not in that game. If you're not in Silicon Valley, if you're not over on Sand Hill talking to the VCs and getting early access, some media guys I know actually get early access and get shares because they're doing interviews with people. And so I know some of those guys are able to do that. But for the normal human, regular guys, we're not getting access. And by the time it IPOs, it's shooting up and it's got $80 a share valuation. So you really don't get to play in that. But what you do get to play in is shorting the losers from these new IPOs, right? Anybody can go short a loser, right? And you can kind of pick and choose. Obviously, you have to be careful. You have to look at who's diversified, who's not, who's at most risk. But when these big evaluations are coming in, they're coming in to give value to a market. Somebody's a loser. Right. Right.
Somebody is left holding the bag for sure. Like, or rather, are you suggesting, Eric, that hey, if AI sucks the air in the room or whatever, like takes all the capital, somebody has got to.
You can't buy memory, right? You can't even buy things to run your company, right? It's sucking such air out of the room.
Right.
And so Microsoft used to do this, right? They could just make an announcement of possibly a place they were going to go target 2 years from now. And guess what? That company would fail just because Microsoft mentioned that they were thinking about offering a product down the road, right? Because they had so much market control.
Right.
So that's what I'm saying. There is an opportunity to see, these guys playing in that market, right? And certainly that was a big conversation all week, was AI evaluations. Is it a bubble? It skyrocketed the last 2 days, and is this for real, right? And I think it's for real for the winners. I think the losers is still trying to figure that out. They're at risk, and like any time when there's huge market transition, the guys that are trying to stay out of the innovator's dilemma, and go look up innovator's dilemma if you haven't heard it, right? But go read about it. And if they're trying to stay out of that, they are working hard, right? And usually some of them will last 2 or 3 years, but you can watch them, and then you can see them, and you can pretty much know that there is no way out. And I've been at companies when I was at Sun Microsystems. We were $18 billion. Linux was here. x86 CPUs were fast enough. You didn't need Spark anymore. And we circled around the innovator's dilemma, toilet ring for a little while, right? As you swish around, that's the joke about it. And but over time, as an executive working with Scott McNealy and Jonathan Schwartz and others, you couldn't figure out a strategy. There was no strategy. The technology had innovated, and you were in a dilemma, right? And certainly watching these AIs jump in the market, and then to your point of the design firm that was that's now going to be impacted. You can go short them because they're not going to get out of it, right? Because guess what? I can have an AI build me, really nice images, right? Really nice designs, really nice CAD of models. And those are all soft.
A lot of these changes also, interestingly, since you mentioned Figma again, right? There's changes happening at multiple layers in the stack, if you will, right? Because the whole Figma is mainly used by designers and product managers, and software development lifecycle process, SDLC, or even the way products are brought to market, how product managers function is entirely changing, right? You're getting hit at multiple levels, right? So you got to, as an incumbent, it is a pretty challenging task. And Salesforce just today, actually, they announced that they're going to make all their data available via MCP servers and CLI, command line interface. That's a massive announcement. It's not picked up a ton of steam. I don't know if people don't grok the importance of it, right? But that's a massive move by Mark Benioff, because it's acknowledging the existential risk for the company. Hey, we don't have any choice. We have to make our systems of record available to agents, to AI agents and agentic frameworks. Otherwise I'm just going to be sidelined entirely, right? I wouldn't be needed at all. That's the fact of the matter. So I think Mark Benioff, I feel like we should give him credit for being the first. Actually, I haven't seen any.
They're trying to get out of the innovator's dilemma. They're trying to get out of the swirl.
Innovator's dilemma is called that for a reason. It is a dilemma, right? It's a tough one.
Right. So it's exciting. That's what's happening this week, right?
It's been a very eventful week.
All about the market and. What's actually happening, and everybody's looking at it going, wow. And I think everybody had a little bit of shell shock for the last month and a half because of everything being depressed,
but
at the same time, a little bit of bubble, and then everybody trying to figure out who's going to be left. And certainly as the AI models mature and you see the big AI, frontier guys going after markets,
right?
This is going to be more the narrative.
True. Absolutely. So I think definitely people should watch. Now I think people are, aware, right? The alarm bell has been sounded, right, with the whole SaaS Calypso. So I think we cannot, what should I say, ignore that, right? Like, it's not like somewhere far down the road. I think that future is now. It's coming closer and closer. So I think for every incumbent, they got to figure out what's their strategy. And on the other side, for AI native players, right, startups, they're also trying to figure out, like, how do we contextualize AI in the enterprise, right? Like, from an enterprise standpoint, it is not a clear-cut answer at all. So I think gritty founders are having to go into companies and understand problems and how to create value, right? Like, I mean, it's again not straightforward, I would say. So,
all right. Well, we're gonna we've been running every Friday night, but we're gonna try to add another night in the midweek to do it as well.
Yeah, that'll be great. That'll be great. And I just want to make the audience aware that none of this is financial advice, right? Like, it's all just our perspective. Please do not rely on any of this for making financial decisions.
Yeah, especially because we don't know anything. So
yes,
it's good, but it is good to have the conversation and give you guys something to think about.
Yes, thank you, Eric. Fantastic chatting, as always.